are you?
You good, Rich? Self?
Yeah, not too bad. Look, I thought we'd get straight into this workflow process. So this particular step in the process is regarded as the recency phase. So I've got a small presentation here. I thought I'd step through to give an introduction to everyone that's listening to this component of the workflow process, and then we'll get into you sort of going through the details of that process.
Yep, sounds good, mate. Yep.
So in this video, which is a video 5 of our series, we're actually now up to step 4 of the workflow process. So in our prior video, we were looking at this robustness phase of the workflow process where we looked at the multi-market applicability of algorithms. But and that was using very long-term data sets. But now we're at the recency phase where we're looking at specifically the ability of our portfolio to adapt to more recent conditions, and also look at how they fare under real broker-specific limitations that, as retail traders, we commonly face. So that's step 4, which we're going to be focusing on in this particular presentation today, called the recency phase. So I've just outlined here the key objectives of this process. So as you're aware, in our prior step of our robustness phase, we were looking at the multi-market capability. So that therefore is assessing systems, all of the different system variations of our different trend following models, for their ability to respond to these very long-term data sets across different liquid markets, and their ability to express these robust characteristics. So they can perform over a wide range of different market conditions. But now, once we've got our selection of candidates which have passed that prior robustness phase, we're left with a large listing. And this next step of the process looks at that existing of robust candidates, but then puts an additional overlay, what we refer to as the recency phase, on top of those criteria we were looking for. And this recency phase looks at the ability of our systems to respond to more recent outliers in the more recent market conditions, where our markets probably exhibit more noise than historically they have, and also more mean reverting tendency. And the impacts of noise and mean reversion on our outliers has basically changed their nature to a degree, and we want to ensure that our testing process, or our workflow process, responds to the more recent character of those outliers. And not only that, in our prior phase, we looked at the inherent trending capability, or the trending ability of our systems to across different markets without the impact of trading costs and some of the limitations that we are naturally faced with when we apply our solutions in our retail world to our live accounts. But this step now backs in the costs that are associated with our specific retail brokers that we use these models for. And it also looks at things such as the minimum lot requirements that brokers allow us to trade, and looks at the margins that limit our ability to have certain levels of leverage with our solutions. And it looks at things such as what are the maximum number of trades that we can apply to any specific broker account, because there are those limitations that do affect our models in reality in this real world. So in this phase, we back all of these into it, so that in a nutshell, at the end of this process, we've got two things. We've got robust solutions that also express their ability to adapt to more recent market conditions. And secondly, we've got solutions that we know that we can practically, tradably apply in our real world when we put these solutions to the test in our live and demo trading accounts. So Fred, anything you want to say here before you get onto your section?
Yeah, just in reference to the minimum lot size, it's not so relevant in this step, but it is in future steps. And what we're looking for here is a lot of EAs will default, if the lot size is less than the minimum, to the minimum. But that could actually skew our results to giving us a larger loss than we anticipate. So what we've done in our system is that if the lot size ends up being less than the minimum, which in most of our cases is 0.01, if it's less than 0.01, it actually won't trade. So it's not forcing a higher risk on us. It's being a conservative approach.
Excellent, mate. Good point. All right. So, look, how about now you share your screen, Fred, and we'll get on to the details of this step in the workflow process.
Okie doke.
All right.
So, Rich, I thought we'd start by looking at the instruction sheet again, just for those, to remind people to go back and have a look at that. And if you recall our last stage, we created these files called Stage 2 CSV files. And you can see them in here, in our file structure. And what we're going to use now is the information that's contained in those files and draw them back into Metatrader. Now, if you recall stage 1, the data mining phase, that went through 5,000 odd combinations to come up with a set of parameters. We then went through and culled them down in stage 2 to those that are showing signs of being worthy of conclusion in the further. What we're doing now is we rank those stage 2 files in terms of multi-market approach, and we're now going to actually run through effectively another data iteration or optimization process, but we're only interested in gathering together the results of those that were previously considered. So I don't know if that's all a bit too confusing, but
no, I sort of understand that. So that they're the results that have passed that multi-market stage that we're looking at. We're not looking at the data mining results themselves, which is of everything. We in our prior step, we reduced that listing to those that were robust, and now we're looking at those robust solutions for this next step.
That's right. What I'm trying to find here, and I'm having a little bit of fun getting there, is I want to show you the stage 2 files for the euro. And I'm going to use that as an example. So here is I'm just bringing it up as we speak. So there is the result of our stage 2 process, and it shows all our DON results for the euro, complete with the multi-market in my particular case, in this particular iteration that I did. And you can see here that we've got something around 2,000 odd entries.
Yep.
So those 2,000 entries have come off effectively the previous 4, 5, 10,000, whatever we had. And now we're going to look through these and see how they go with costs. But we're not going to do all of them. We're only going to do the top 600, sorry, the top 300. The reason being is we're not looking for hundreds and hundreds of combinations. So we'll pick the top 300 and we'll run through those to see how they perform. And the way we do that is if we go back to here, we've got a number of files. This stage 3 files are identified as this combination. And if we open up, where are we? Looking now, looking. If we go to Metatrader and we look at the DON series. Now this is not, I'm showing you how to do this in a manual sense, but in the next few minutes we'll show you how to do this automatically. But just to show you how the file works, that's the DON version of the stage 3, and its expert properties, as was shown in the instructions, looks something similar to this. I don't know if you can see that. But
I see that. So, yep.
So we're looking to keep with our $500 risk. In this case, we've got some options there for positive and negative swap, etc. We're also looking for a profit factor, which then, as we're culling through those 2,000 odd or 600 in our case, or 300, we're looking for a profit factor, a minimum hurdle rate. So it needs to get at least to 1.2 profit factor. We're only going to have a single trade per EA, which is how we set this up in the first place. We're not adjusting for the last bar. You've seen all these characteristics before. The important one is this one here, and this is how, in fact, we're going to do our 300 EAs, how we're going to test them. And we're using the characteristics of MT4 through the optimization process, but we're not optimizing. So don't look at the results that you're getting from this. It's just the way we're actually doing the data mining effectively. And you'll see here we're going from 0 through to 5. That's 6 steps. Each step is of the top 50 EAs.
Oh, I see. So this last step is it's categorizing our EAs into groupings to fast track the process effectively.
Well, it's fast tracking, but also there's a limitation in Metatrader in terms of how many trades we can actually run or how many EAs we can run concurrently. And we're running these concurrently, so it's not like it has to go through 50 times. It'll run through once to do 50 in one hit, which is another reason we need to have at least $1 million in our initial deposit here, because we've got 50 traders running, drawing on that initial deposit. Margin calls, etc., come into play. So we need to have enough money in the bank to be able to run this test.
Yep.
It's nothing to do with the performance. It's only the way the EA has been set up. So, Rich, what I thought we'd do is have a quick look at the stage 2 file for the Aussie, just to remind everybody what information is in there. And that's the CSV file we've created. It's got our multi-market levels, etc. It's for the Donchian tester, which is what we're trying to see. And you'll see we've got 2,200 odd files in there at the moment. So what this EA will do, it'll take the top 300 of those and it'll apply the costs as we've spoken about and give us a series of files which we can then move on from. So if you just bear with me, I'll jump back to MT4. And here we have MT4, expert properties we've spoken about. Again, it's we're looking at this profit factor of 1.2, and we need to leave this set at for the optimization phase, as we've spoken about already. So, with all that in place, let's make sure we've got the spreadsheet closed. We don't want to have that open, or we'll run into problems.
And we're using AUD USD just so everyone's familiar.
Yeah, AUD USD, and we
hit date range. Do we need to specify?
Yeah, the date range is from 2010, so it's the last 10 years effectively.
Yeah, so
and
just
so it's running through now. It's because we've ticked the optimization. It's going to run through 6 iterations of this, and it'll pick the top 50, and then the second top 50, and then the third top 50. And you can see down here 1 of 6. And so this is now going through, looking through that stage 2 CSV file and creating a series of stage 3 files.
So just so people are aware, it's looking at the stage 2 file, which was over a longer history, but it's only looking at the data for the last 10 years for this recency phase, isn't it?
It's actually rerunning the EAs again, which
Yep.
is why it's going so much faster. But it's only going to do 50 at a time rather than 4,000.
I see. And in rerunning those EAs, it's embedding the trading costs back in and all of those workarounds we've incorporated into this to mimic real live conditions.
Correct. And so here we are. It's done it. That's how long it takes. Not particularly onerous.
Yep.
And you'll see here, if we look at the files, we've got a number of files. All these files have just been created by this one process. And what you'll notice straight away is there's a -0, -1, -2, -3, etc. That's the 6 runs that we've done. So we ran through 6 times, and each time it created an equity file and an output file. And just looking at that, we'll just have a look at one of those just to give you an idea of what's going on. Knowing that we went through the top 50, we've only got 32 of these have come through. So that means 50 minus 32, 18 of them have dropped off.
Yep.
They didn't pass our hurdle rates.
And that's because we had a profit factor of 1.2, and obviously for this particular market, there weren't 50 that met those criteria.
Yeah, there's the profit factor column, so you can see there's nothing there less than 1.2. So there's a good chance that those multi-market ones, although they were probably good performers, just didn't deliver enough profit factor to be included.
Right.
So out of the top 50, we ended up with 33. If we then look at the next range, where are we? Well, as it turns out, there it is there. And we've had 30 this time instead of 50.
Yep.
And you can see through, this will be the last stage, that's -5, and only 10 of those have come through.
I see, Fred.
So what's happened now is we've created a series of files which will be used in the next stage. So I just wanted to run through that one stage manually because that gives you an understanding of what's going on. But in fact, we've set this up in MT4 to run as we have before through a batch file. So you would never actually run this file on its own. This is just for demonstration purposes. But through the batch file, it will call these files up one at a time for each of the instruments, for each of the strategies. And so what we're looking to do is actually load in this file here.
Okay, so this is the overriding batch file that controls all of the separate systems.
Yep, and it'll run through each strategy and each instrument 6 times using the same approach to come up with an overall consolidated result. And here, again, if you go back to your instruction sheet, you'll see that this is the way we set it up. Again, your login, password, and server details from MT4. You've then got your date range, whatever you want to test over.
Recency date range, yep.
Yep. And then you can select whether you want to include them or not. And again, the portable, etc.
That makes sense, Fred.
Again, we're going to end up with a series of files and a batch file. Do we want to do that, Rich, or do we want to let people have a play with that?
Because I think we've described the process, so now we let people play, and we'll come back to them in our next video series episode, which looks at the next stage, which is we've gone through the more technical aspects of the workflow process to this point now, but it starts getting more exciting from now on, because what we're going to be doing is compiling sub-portfolios together, and then once we've got our sub-portfolios that are relevant for individual markets, then we get start compiling these global portfolios together. So almost all of the hard processing tasks have now been undertaken, haven't they?
They have, and from here it's a downhill run, and it's just going to get more fine-tuned as we go, and then we'll end up with our single trader at the end.
Super, Fred. So anything more you want to add?
I think we've covered this one, Rich.
All right. Well, take care, everyone, and trade safe, and thanks for watching.
Cheers, guys.